Okay, by the way, those are M&M's numbers that have come through. The tractor sales looking good, actually. Domestic sales up 20% at 33,622 units. So we'll also get the auto numbers. The total sales have gone up 18%. So that's looking good. We'll get to that in greater detail in a bit. We'll also try and perhaps touch base with the management. But in the meantime, all auto stocks are doing well. So whether it's Maruti, Eicher Motors, Hero MotoCorp, all up to 2.5% right now. Maruti telling us that their SUV market share is something that they hope to take up from 11% all the way to 25% next year. And now this stock is also moving up, similar to, the market share. But Nigel, you're watching out for cement stocks today.
Well, that's right. Now, Jefferies, they've come out with the note, and we had given the market a bit of a heads up in the past week itself. There's a high probability that there could be a cement price increase that will be pushed about. So Jefferies has given us some takeaways from their interactions with dealers. Couple of points to note out there. The All India prices, we have been mentioning it's been weak. So it was weak for the past month. That's for March 2023. And even on a sequential basis, that's Q4 versus Q3, it's down by close to 100%. Prices, one of the reasons that they have been weak is because volumes have been pushed through. The other factor that they've mentioned is that there are price increases that have been taken about, and they've quantified it. On an average, All India, it could be higher by close to around 5%. That's the attempt to increase prices from April itself. And also they say that in South India, it could be hiked by as much as 50 rupees per bag. Demand as well has been rather strong in multiple markets, and that's perfectly reflected in Ultratech Cement's 15% growth that they've given, on a year-on-year basis. On Q4 numbers, they're still working with, in spite of no price increase, they're saying that there'll be a growth in EBITDA per ton because operating leverage will play out and input costs have cooled off. Not just that, for Q1 FY24, things will look up because then you'll get the full benefit of lower input costs. Being a pre-election year, they're working with cement demand for the entire industry to grow by close to around 9%. So those are a few takeaways that came in from Jefferies.
Okay, just want to mention one word on M&M. The company has clocked in its highest ever annual tractor sales of 4.07 lakh units in FY23, and the commentary from the management is also quite good actually for tractor sales. They're saying that an increase in crop output, the mandi price is staying firm, the government support has increased in MSP for major crops, and an increase in wages under the Manrega scheme will help improve the financial security of rural households, and hence tractor sales could pick up further. So perhaps that explains why the stock is up about 0.5%. More on that later. CSB Bank is the other one which is on our radar. Abhishek is here to tell us more on that. Abhishek.
Well, Sonia, it's a strong business momentum that has continued in Q4 like it did in Q3. So deposits are up 21.5% YOY and about 8% sequentially. The CASA momentum has been pretty strong on a sequential basis, growing by 10.7% quarter-on-quarter in absolute value. So as a ratio, CASA ratio has improved by nearly about 53 basis point quarter-on-quarter. Advances growth has been pretty strong, 30.3% YOY and about 11.75% quarter-on-quarter. Calculation does show that there is improvement in the credit deposit ratio by nearly about 275 basis point quarter-on-quarter, which should augur well for net interest margin either remaining strong or improving on a sequential basis. Now, the gold loan portfolio that's grown nicely by about 10.5% quarter-on-quarter, but its share has declined by 53 basis point given the fact that other loans, that is loans apart from gold loan, they have grown by 18.15% YOY and nearly about 13% quarter-on-quarter. So strong business momentum for CSB Bank seen in Q4 FY23. Back to you.
Abhishek, you're watching Karnataka Bank as well?
Well, Prashant, on a negative front, Karnataka Bank has surprised negatively on the loan growth front. Now, it's the industry-wide, there is a strong momentum in loan growth for the banking sector, YOY and quarter-on-quarter. But for Karnataka Bank, the loan book is down 3.7% quarter-on-quarter. So deposits are up 8.7% YOY and about 3.3% quarter-on-quarter. Their loan growth shows that they have lost market share both YOY and quarter-on-quarter. The CD ratio, credit deposit ratio, that's a sharp decline by more than 500 basis point quarter-on-quarter, which could put the net interest margin under pressure on a sequential basis. CASA is up 8.7% YOY and 6.7% quarter-on-quarter. The CASA ratio has remained stable YOY and improved sequentially, but the loan growth that has not gone down well with the investors. Back to you.
All right, Abhishek, thanks very much for that.